Market news now, and Asian markets were gripped by volatility on Thursday. As investors grew increasingly worried about the state of the global economy, sending them rushing to safe haven assets and fueling talk of a possible recession. That talk has continued this whole week. The pound was managing to hold its own despite another night of drama in Westminster that saw Prime Minister Theresa May offer to even resign if members of Parliament backed her Brexit plan, and lawmakers reject a series of alternative options on leaving the European Union. Now, after a stellar start to the year, equities are beginning to stumble with closely watched sovereign bond yields, key indicators of the state of the economy, now flashing all the warning signs. Mixed picture at close as Tokyo's Nikkei dipped 1.6% to 21,033 points. 28,775 for the Hang Seng. That managed to tick up 0.2%. Shanghai Composite lost almost 1%, still below 3,000 points. United States stocks then easing on Wednesday as U.S. Treasury yields fell again. And this is a prolonged inversion in the yield curve, fanning growth fears and growth worries. The Dow Jones Industrial dropping off over 0.1%, 25,625. The S&P 500 losing nearly 0.5%, 2,805 points. Nasdaq Composite down 0.2%, 7,643. Taking a look at how that market picture looks right now out in Europe, it's a whole lot of green here locally as well. Pretty much flat and mixed market on the whole when one takes a look at how proceedings are faring. The financials 15 are around 0.5% down as well this afternoon. And things have certainly not given us some clear direction, with growth fears being at the helm, at the forefront of how market conditions look. So perhaps a little bit here and a little bit there. We'll see how things fare, but here are those numbers. Well, now we get into that market picture. Let's chat to Chantel Marks from FNB Wealth and Investment. She joins us also from the JSE. Chantel, thank you so much for the time as well. A bit of a flat market, not really going anywhere today. Nothing really exciting other than the man who was sitting in that seat just a moment ago, Gerrie Fourie and Capitec.
Yes, certainly. I mean, market's really topsy-turvy at the moment and kind of uncertain around whether or not it wants to be risk on or risk off. A lot of conflicting data across the world, a lot of conflicting kind of news reports coming out as well. And in South Africa, certainly the focus having been on Capitec, who released results just after 7 a.m. this morning. So far, it seems as if the market quite likes the result. Headline earnings per share up 19%. Nothing to frown upon in the current market, particularly if you look at it against other banks. But if you drill down in the numbers, it is a little bit mixed as well, almost like sentiment all across the world.
Yeah. What is that mixed sentiment, though? Because if I take a look at it, I mean, yes, you speak about headline earnings going up 19%, dividends going up 19% similarly as well. You're going to grow customers in the month of March alone by 230,000. You've grown 1.5 million customers as well in the last year alone. Things just look, seem to be headed up. Where is the flaw in this one?
So, I mean, transactional income or fee income has done quite well. But when you look at interest income, it actually declined. So despite the fact that they managed to grow customers, the interest rate margin that they enjoyed was actually lower on a year-on-year basis. Another thing to be cognizant about is just the fact that operating expenditure is growing quite quickly. So they did mention that the share price increased by quite a bit, which had an impact on share-based payment incentives to executives, but that doesn't fully explain the fact that operating expenditure increased well up in the upper double digits or upper teens, not upper double digits. That would be in the 90s. It was close to 17%. But still, exceeding revenue growth. And for that reason, the cost to income ratio deteriorated a little bit. So just little things that are in that result that's not ideal.
this share didn't fall 100%, so you'd certainly be right in saying it fell more into the upper double digits when we say Steinhoff. But it still looks to be unpacking quite a bit of its shares as well. The likes of Unitrans now being able to sell off the shares on that front. The saga on this front just continues.
Yeah, I mean, the company did mention that they were looking at selling some of their non-core assets, and certainly CAP was one of those assets which they sold earlier this week, removing an overhang from that share price, thank goodness. But now they've also noted that they are looking to sell Unitrans and that they have found a buyer for that business. So Unitrans, it's mainly kind of an automotive dealer network, so they're basically selling vehicles, and I'm not 100% sure whether or not it actually includes the logistics side of that business as well. But as far as I can remember, the logistics side of that business is actually within CAP. So, yeah, they're just looking to clean up that portfolio a little bit, probably raise some capital in order to get themselves out of the hole that they're in right now.
Look, it's going to take a while to get themselves out of this hole, but it does look like they're willing to take all the time they need with regards to it. Sibanye Gold as well, a bit of a struggle with regards to that share. Once a really shining light in the mining industry, it continues to look that way, but with its investments in the platinum sector as well, it does seem to be perhaps struggling just a touch.
Yeah, I mean, today has been a very strange day for Sibanye Gold. It's down more than the other gold miners. So gold miners generally have come under pressure because the gold price has come under pressure, which is one of those weird indicators that I spoke about, where we don't know if the market is actually risk on or risk off at the moment. So gold shares generally coming under pressure. But Sibanye actually announced recently that they're looking to move their primary listing outside of South Africa, perhaps into Europe. And the market not really supporting that, it seems. You would have thought that that share price would have received some support on the back of an expectation of a larger shareholder base and perhaps an improvement in liquidity.
Yeah, one can only hope. So very quickly, 3 p.m. today, Lesetja Kganyago and the Monetary Policy Committee announced their interest rates decision. Chances are it's a hold, but what will you be looking out for?
Well, we'll be looking at whether or not the Reserve Bank actually changes their forecasts on inflation. So we expect inflation to be quite benign for the rest of the year and for the Reserve Bank to reflect that. Any comments around their expectations of perhaps inflation remaining around the levels that they were initially expecting, or even threats to inflation, could change the picture somewhat. We don't expect them to do anything right now, and from our perspective, we expect inflation to remain firmly within the Reserve Bank's target range and very close to the midpoint of 4.5%.
This certainly means a cut may be in the offing. We'll see. We'll see. I'll certainly bug you and ask you for that question a little bit later on as well, though. Chantal, appreciate your time this afternoon. Chantal Mark from FNB Wealth and Investments. They're unpacking that market picture for us as well as we continue to get things on the road there. So